Priti Patel there, saying that taxes currently are unsustainable. Is she right?
Well, taxes are at a 70-year high. Taxes are so high that even the Lib Dems are saying they don't want to raise taxes. Obviously, in their conference last weekend, they abandoned their quarter-century-old "we will put 1p on income tax and give that money to education/health/pothole filling," depending on which particular the audience they're talking to at the time. And so the tax burden is really high. Is it any wonder we spent £400 billion during the COVID pandemic and the economy has not really got out of second gear since that pandemic? To be honest with you, Ellie, the economy hasn't really been firing on all cylinders anywhere in the Western world since the global financial crisis in the late 2000s. And this is why we have a really high tax burden. We've got demography coming through, more older people compared to more younger people needed to support them. We haven't got the expansion. Though I must say today we have had some pretty good news on the growth numbers from the ONS earlier this morning.
Take us through those, because they're a lot better than expected, aren't they?
They are slightly better than expected, even though they're quite low. So between April and June, what we call the second quarter, the second three-month period of the year, GDP rose by 0.2% compared to the previous quarter, but the first quarter was revised up from 0.1% to 0.3%, and growth in 2022 as a whole was revised up from 4.1% to 4.3%. That's a really high number for the UK, but we were sort of bouncing back because 21 was, a semi-lockdown year. And what's really interesting to me is these revisions, plus the revisions we had a month or so ago, the UK is now no longer a laggard in terms of how we've recovered from the pandemic. We've grown more since the pandemic. We've grown by 1.8%. That's more than Germany, which is like 0.2%, and more than France as well. Less than the US, but the US is generally a more dynamic economy. So you can no longer say that Brexit Britain is, being dragged down by the fact that we left the European Union, given that the two biggest economies in the European Union are growing slower than we are.
It's remarkable. They were always supposedly sort of the big four in the European Union when we remember France, Germany, the UK and Italy. Of those four, I think I'm right in saying that the UK is growing faster outside of the European Union than it was on the inside. Jasmine, let's bring you in here now. We can't say that's to do with Brexit, but I suppose it does show that perhaps people jumping on these numbers before they were revised were trying to find a narrative that might not be particularly true.
Yes, and to be honest, I think that we could grow even faster if we were working together, because one of the problems that we have with, post-Brexit is that we have a significant number of people in government, in the civil service and in all sorts of areas of Britain that really want to work against Brexit. So you have those who are pro-Brexit, you have those who are against it, and so if you're working against each other, you're not going to have very much forward movement. So frankly, the fact that we've done what we've done is pretty amazing, in that situation. And I do keep reminding myself that Germany is in recession. I mean, as Liam said, the growth figures are better than expected. They are still low, but, at least there's some growth. At least it's slightly better. Whereas in Germany, they really are struggling.
I suppose in the context of the G7 and those four big countries, the G7 European countries, the UK, France, Italy and Germany, the UK is doing the best out of those four out of the pandemic. But it's a low-growth club. Yeah, we're the best of the worst.
Yes,
and compared to the United States, which is just experiencing extraordinary growth, we're in a different league.
Well, we are, and worse than that really is Asia, because, I've got a few Asian friends who are saying, Britain and Europe, they're becoming the third world countries. That's the way they're looking at it, because the growth, you look at India, you look at Vietnam, for example, Taiwan, there's extraordinary growth there. And as Liam pointed out, there's a lot of youth there, also Middle East and Africa. You've got a lot of babies being born, which we don't have so much in Europe. So we're an older, I was going to say nation, continent, and we have more to pay for. And this is not going to get easier as it goes forward.
Liam, do you think we're going to see a bit more of a stable picture now when it comes to our economy? Because recent months we've been plagued, really, haven't we?
I'm getting grey hair. Could be a good career move, a bit of grey hair.
There's been talk, hasn't there, about recession and whether we're going to go into one or whether we've avoided one. Is it going to stabilise now?
Just to pick up on what Tom said, the US is growing strongly. The US has grown by 6.1% since the end of the pandemic, and we've grown by 1.9%. France 1.8, Germany, as Jasmine was saying, 0.2. Germany is now the sick man of Europe because its whole business model has been built on cheap Russian gas. Are we going to see a more stable situation now? I think my sort of central assumption is that we will. Inflation's coming down. The UK seems to have dodged recession. With interest rates hopefully not going up anymore, central assumption, then growth will come to the fore. We probably will get a pre-election tax cut. We're seeing manufacturing confidence holding up. We're seeing maybe the housing market stabilising. It will start to turn. That will bring back consumer sentiment. So that's my central assumption. But you never meet a one-handed economist, right? That's on the one hand. And on the other hand, Ellie, something I've been mentioning quite a lot on GB News for quite a few weeks and months, there is a big whiz-bang, and that is the oil price and geopolitics. We're all expecting inflation to keep dropping this winter. We're all expecting cheaper energy than last winter. We're all expecting interest rates to come down. That's the central assumption of politics. But actually, look at what's happened to the oil price. The global economy is still quite sluggish, despite America. Why? Because China is growing more slowly than it has done for 30 years. It's still growing by about 4%. But a lot of property interest in China, they're looking quite shaky. A lot of people in financial markets around the world worry that China is going to be like a new Lehman Brothers.
Youth unemployment in China is extraordinary.
Absolutely. And there's signs of political unrest, which is why, but the government's very heavily indebted, so it can't just throw money at the problem like it did in the aftermath of 2008. But let's have a look. The global economy is still pretty sluggish. The demand for oil is not going gangbusters as it would be when we're growing fast. So it's not the demand for oil that's pushing the oil price up. It's gone up from $70 to $95 in 2.5 months. That's a 35% rise. That's why we're seeing really high petrol and diesel prices. Oil is going up, even though the global economy is sluggish, because of OPEC. Because of the OPEC exporters cartel. They are deliberately restricting supply. They are working in conjunction with non-OPEC member Russia. The Saudi-Russia, Riyadh-Moscow axis. We should be talking about it a lot, but hardly anyone wants to address it. But it's really, really important. OPEC are squeezing global oil markets. The oil price is rising steadily. That's going to complicate our ability to escape inflation, to get rid out of this ghastly cost of living crisis. So yes, Ellie, my central assumption is that it will be a bit more stable, but watch out for OPEC.
Goodness me, that does sort of highlight the fundamental instability around all of this. And I wonder if that instability is one of the reasons why 300,000 more people, Jasmine, this year cashed in their pensions compared to last year. Why are we seeing so many people cash in their pensions?
Well, firstly, because they can, because, as you know, we have pension freedoms. We've had them for a few years now. So it does mean that people over 55 potentially can cash in some or all of their pensions. And this is, a good move, I think, originally by the government, because it meant that it made pensions a bit more flexible, a bit easier to deal with and more attractive. But when you have a time when, as we have had, people are really struggling to pay just their day-to-day bills, it is too much of a temptation to go into that pension pot. And the problem is that, at 55 is very young. I mean, even 60, 65, you've got another 20, 30, 40, 50 years.
65 is the new 45.
It really is, yes. We've got so many sort of centenarians now. That's a good long time to pay for your pension. So I'm really, really keen for people not to do this if they possibly can. What I've been saying on my website, moneymagpie.com, is to make money on the side. There are so many side earners, and a lot more people who are retired or above pensionable age are bringing these side earners in just to keep themselves going on a daily basis. That, honestly, is much better than going into your pension pot and harming your future.
It's a fascinating point. And Liam, I suppose this is actually something that the government is concerned about as well. People perhaps relying more on their pension when actually they could be a valuable part of the workforce, getting some of these side hustles in. The Chancellor's been talking about this recently.
Can I just say, if 65 is the new 45, I'm now in my mid-30s.
Yeah.
What were you saying about grey hair? I don't see it.
Couldn't help yourself.
Look, a lot of the reason why there are more people cashing in their pensions is simply demography, because the baby boomers are now unwinding. You know, it's just what aside from all the valid points that Jasmine made there, it's just, you know, our natural demography is unwinding. Demography is destiny. It's hardwired in the birth rates, you know, in the years immediately following the Second World War and into the early and mid-50s. But if there are more people cashing in their pensions, we don't have those people in their late 50s, early 60s, mid-60s, late 60s in the workforce the way we did. And this is really hitting a lot of industries in the service sector, you know, professional driving, taxis and so on. Construction, a business my family knows well. A lot of the sort of really talented older guys who are steady workers, they teach the younger guys, sort of informal apprenticeships. They're now retiring earlier.
And it cuts into a conversation we were talking about earlier, because now construction is a shortage occupation list occupation.
Sure.
You can get in foreign workers for 80% of the pay of British workers now, surely partly because people are retiring early.
Yes, but the problem with that is that means we're not training our own plumbers and chippies and sparks and bricklayers, and that then hardwires in a shortage of those vital skills into the future, which means we're less likely to build the houses that we need.
Okay.